Good morning, Mark Soderberg with ADM Investor Services with your morning egg market outlook for Tuesday, February the 4th. Well, mostly lower trade overnight as the market just continues to focus on tariff headlines. Since yesterday's close, China has imposed retaliatory tariffs on some U.S. goods, which include 15% on coal and liquefied gas and 10% on crude oil, agricultural machinery, and vehicles. At this point, it does not appear to include agricultural commodities. In addition, the Trump administration did push back the 25% tariffs on Canadian imports for 30 days following yesterday's afternoon's phone call between President Trump and Canadian Prime Minister Trudeau, as Canada does intend to beef up border security with the U.S. Trade overnight is mostly lower. Beans are now down about 4 to 5. Meal is up $2 to $3 a ton. Oil has backed up significantly, down about a penny and a half. Wheat is off 5 to 8 cents, while corn is steady in the nearby contracts, down 2 cents in the new crop contracts. A lot of demand news after the close yesterday as well. The USDA did confirm a record 218 million bushels of soybeans were crushed in December. This was in line with expectations. And just above the previous record of 216 million bushels from last October. In the first 4 months of the 24-25 marketing year, cumulative crush is up 6.3% from a year ago versus USDA forecast of up 5.4%. Bean oil stocks did rise to just below 1.7 billion pounds, up nearly 5% from November, however, slightly below expectations. Corn used in the production of ethanol in December rose slightly to 473 million bushels, however, was down 2.3% year over year. The November usage figures were also revised up by 7 million bushels. So usage now in the first 4 months of the marketing year has reached 1.86 billion bushels. That's up 1.5% from a year ago versus USDA forecast of corn usage being up less than 1%. A number of states across the U.S. did report winter wheat crop ratings yesterday afternoon. Modest improvements were noted in Kansas and South Dakota. Big improvements in Montana, while lower ratings were reported in Oklahoma, Texas, Colorado, and Nebraska. Savicon, they're reporting projecting the Russian wheat exports for 24-25 at only 42.8 million metric tons. That's well below the USDA forecast of 46 million metric tons. And in South America, Solaris, they raised their soybean production estimate for Brazil by over 3 million metric tons to 174. That despite harvest delays. Earlier yesterday, AgriWell, they estimated harvest at only 9% versus 16% from a year ago. First crop corn is 14% harvested, while the second crop is only 9% seeded. That versus 27% a year ago. Dr. Michael Cordner, he lowered his Brazilian corn production forecast 2 million metric tons to 123, citing planting delays. USDA is currently at 127. Rains are starting to fill in over some of these key growing areas that have been extremely dry in Argentina. Coverage and overall totals this week, I think, will go a long way at determining their final corn and soybean production, while the areas to the north now are expected to turn into a hot, dry pattern here for the next week to 10 days. Corn is currently steady in two-sided trade. Strong demand, I think, will continue to support old crop here, particularly if we can tone down the tariff talk. March beans are holding just above the 1050 level. Continued delays with the Brazilian harvest could open a window for higher U.S. demand. Basis levels in Brazil have started to improve a bit. Oil gap lower on the now that the tariffs at least are pushed back for a month with Canada. Meal is running into resistance at its 100-day moving average, while wheat has fallen back to about the midpoint of yesterday's range. Thanks for listening, everyone. Have a great day.